Let's connect with Brent Johnson as well, who's joining in from Santiago Capital. Thank you so much for being with us. And the situation getting worse day by day now, with the U.S. President Donald Trump saying that the worst of the outbreak could last until August, and saying that the U.S. may be heading into a recession. It seems like it's rather impossible for investors, marketmen, and pretty much everyone to actually keep things into perspective with these kind of headlines.
Yeah, we really are in unprecedented times here. I've been around doing this for over 20 years now, and I've seen 2 or 3 different crises, and this is one of the fastest developing ones. But, I have to say, some of us did see a crisis coming, and I think the crisis is going to last a while longer. Right now, it's kind of playing out in stock markets around the world, but I really think it's a currency crisis. The underlying cause of all this is a lack of dollars in the system. And I think it's the fight for dollars is just getting started.
I want to take that further, Brent, because I think, in fact, we had touched upon that late last week, that the next potential war that would be brewing here, or crisis that would be brewing here, would be on the currency front. Just talk us through that, because in the current context, none of the normal or historical parameters seem to apply. With everything in free fall at the moment, from the dollar to crude to safe haven assets, everything seems to be in free fall.
Yeah, well, I really think it comes down to liquidity. When you see markets falling the way that they're falling now, and you have a panic the way that you have now, markets are just getting liquidated. It has nothing to do with fundamentals. It has nothing to do with technicals. It literally has everything to do with just get me cash. And the reason that is because everybody needs dollars. And when I say dollars, I literally mean U.S. dollars. I've been saying for a couple of years that we were moving towards a currency crisis, because the simple fact is that there are not enough dollars in the system to satisfy everybody that needs them. Everybody always talks about the amount of debt that the United States owes. And listen, we own a lot. We owe a lot, and we're going to have to pay for that at some point. It's going to be a crisis here at home. But the big problem is that the rest of the world over the last year has borrowed $13 trillion in U.S. dollars, not in their home currencies, in U.S. dollars. And, as we've moved forward over the last 10 years, monetary policy diverged. And what I mean by that is that the U.S. started raising interest rates while the rest of the world was still lowering interest rates. Now, we've turned that around pretty aggressively in the last 15 months, but the problem was already set. And that is that when we did that, we started pulling those dollars back into the United States. Our interest rate policy, our tax policy, our regulatory policy, it all made the United States the most attractive place for foreign capital to come to. And so all the dollars have been coming to the United States. That leaves a lack of supply outside the United States. And it makes it harder for the rest of the world to service the $13 trillion of debt that they owe. India, for example, has almost $30 billion or $300 billion of U.S. dollar denominated debt. Now, India has a $3 trillion economy, I think. So, 10% of that a year goes to or needs to go to pay off U.S. dollar debt at some point. And so just the interest payments on those, adds up to be quite a bit. And the rest of the world, they need at least $1 trillion a year, if not more, just to service the U.S. dollar-based debt. And the United States is not exporting the dollars the way that we used to. And so there's a theory called Triffin's dilemma, which says when you have a global reserve currency, at some point, the needs of the domestic economy will come into conflict with the needs of the global economy. And I think that's right where we're at. We're right in the heart of Triffin's dilemma.
Brent, okay, I think finding answers to these questions is incredibly difficult right now, but give me a sense of what you're making of the moves by the central bankers. The Fed stimulus, the fact that the ECB is now gearing up for $1 trillion, that they may look to pump in. We've already seen other, actions from central banks around the world. Any of this that's going to help in the longer term?
No, it's actually going to make it worse. And the reason it's going to make it worse is because whatever they do, it's going to weaken their currency versus the dollar. There's not enough dollars in the system. The Fed is doing everything they can to weaken the dollar and to provide dollars to the rest of the system. Think about everything they've done just in the last week. They've rolled out like $2 trillion worth of stimulus or potential stimulus in the last week, and the dollar has not fallen. That is a sign of severe lack of dollar supply in the system. And if other countries come out and try to stimulate by printing their currencies, that weakens it even more versus the dollar. The lack of dollars in the system is so severe that I don't see how we get out of this without a currency crisis. I think every currency in the world is going to fall versus the dollar.
All right. Thanks much, Brent, for joining in and giving us your take on the overall mood. Do stay safe.